Alrighty, guys, welcome everybody. Hope you are all having a fantastic day today. Welcome to this week's swing trading live stream. Hope you guys are doing well. We're going to be talking about the best strategies, the best approach, stocks that I'm trading. So, guys, smash that like button and subscribe. And if you guys are new to the channel and you want to elevate your trading game, check out our school. It's called the Swing Trading Masterclass. It's an 8-week course, but it's self-paced. So, if you have that 9-to-5 job and you don't have as much time to focus on education, you can do it at work. You can do it on your phone, on your desktop, a laptop. So it's all self-paced. There's a private live streams. There's a group chat to ask questions. But more importantly, we actually teach you to trade. So check it out down below. And you guys can get 51% off by using code TRADER. So check it out. It's worth it. And only a couple of spots left for that code. And you guys absolutely love it. So guys, let's get started and jump into this. So the first thing I want to talk about, because a lot of people always ask, they go, Carter, what is swing trading? What is swing trading? So swing trading simply is when you buy a stock, you hold it for more than a day, in less than 1 year, and you sell that stock. Now, on average, I hold my swing trades for about 6 to 9 days. What we're taking advantage of is short-term momentum. So often with the strategy that we're going to be talking about today is often a stock on an upward trend that is sold off down to some level of support, right? For me, I'm never going to be finding a stock at 10 cents and trying to sell it for $200 or, trying to make $1 million off a trade. I focus on consistency. So those 1, 2, 3% returns might not seem like much, but 3% compounded over a year every week will add up to a ton of money. So just focus on small returns that add up to a lot, right? The next thing that we focus on is obviously being consistent, but having good risk management. We always want to be risking $1 to make $2 or $3. So, let's get started here. And if you have any questions as we go, feel free to ask, and let's jump into this here. So the first thing here is the broker. The broker I use is Moomoo. They're awesome. I'll put a link to them down below, but they're the charting I use. They're the broker to buy and sell, but more importantly, they have a paper trading. So if you're still getting started with trading, you guys can paper trade. So like using simulated money to practice. But another thing I want to talk about here before we just look and analyze this stock is going to be just the time frame. People think that trading is this glorious thing to get rich quick. And yeah, you can get rich, but you're not going to get rich quick. You're not. And if you've came to this video or this live stream or my channel expecting, to get rich quick, I'm sorry. Trading is just like any other job, right? There's things that are great about it. There's things that are boring about it. And there's going to be things you don't like about it. And you have to have that long-term outlook of like two years plus. And I know that sounds crazy to even put out there that trading takes time. Well, yeah, it's just like any other job. An engineer, a doctor, a lawyer, it takes years of practice and hard work before you often see results. So, all right, enough with that rant. Let's look at the strategy here, the stock that we're in on, and go from there. So the position that we took here was our main trade this week was GILD. GILD here. Before I ever place a trade, I want to have a stock that follows my strategy. So what's the first way you can do that? So for me, I focus on I focus on a checklist. A checklist is a set list of criteria that I'm very, very hard on myself for the position I take to follow. So with GILD, the first thing I have is trends. I want a stock on an upward trend. So you guys can see it's gone from lows at like $59 all the way up to about $119. So it's like doubled in about a year span. So we know there's a significant amount of buying pressure, which is good. Okay, the next thing I have is support. So support could be a variety of things. It could be a certain price. It could be a trend line. It could be an indicator. And with this one here, with this one here, it sold off down to that 50-day moving average line. So you can see in the past where it hit it, we have buying pressure. Hit it, buying pressure. Hit it, and we had a good move, right? Because of the recent tendencies of support. All right, question. I took a loss trade. Took another loss trade this week. Now I'm going to start paper trading and wait to trade live when the market shows more consistency. Yes, over the past couple of months, the market's been very, very volatile. It's been very, very up and down. Some days are doing well. It's that's why like setting those stops are important. Honestly, just having more experience. This is where, you know, like anybody can be a trader in a bull market. I'm very confident in that statement. Anybody can buy a stock, hold it for a couple of weeks, couple of months when everybody's feeling good, right? Everybody's buying in. But what makes a good trader is times like this where you're you're still taking profitable trades. The market kind of that we're in. So for me, I'm taking profit earlier, I'm keeping my stops a little tighter, and more importantly, with positions that I'm very confident in, I'm not going super heavy in them, right? I'm not going heavy in them. I'm honestly just averaging down. So like as like almost all of these here sell off, I average down, right? So like with VU, as it sells off, if it dips down below like 510 to 500 again, we'll buy more. So yes, I want to we'll talk about that here after this stock though. But there's nothing wrong with that though. Nothing wrong with paper trading. People don't like it, but those people aren't profitable. So it doesn't bother me. All right. So GILD, first thing's trends, next thing's support, which is that yellow line, the 50-day moving average line. After that, we look at the RSI. The RSI was trading for about a 38. The last time it was trading for a 38 was back in this range where what happened? We saw this great move. Okay. So now here, some traders would just go, all right, well, let's buy the position here. Well, yeah, that makes sense. But if you look back here, you can see where, moving average lines and that yellow line really doesn't act as, support. So what do you look for? So for me, I look at other time frames. Right now, we're looking at the daily time frame. The next thing I'll do is I'll go to the hourly time frame and I will draw out the trend. So we can see this general downward trend. Okay, if we'll remove this, it becomes a lot clearer. And now what I do is I just throw an alert above this trend line and I continue to move it down as the stock sells off. Okay, so as the stock is selling off and we have the trend formed, I am moving like these past couple of days in here, I was moving my stop loss continuing on that trend. So now when the stock pops up, right, I actually waited a little bit. We got in about here. But same approach here. That alert was set, waited for the breakout, at least I do, often of moving average lines that popped up, hit it as confirmation. So hit that 200-day moving average line, popped up, hit it again, and it's been rallying up ever since. So it's been a great play, keeping our stop loss just below, right, just below that moving average line. And it's been paying off really well. So this is a simple approach you guys can do. Now, other stocks like VU, you can see the trend line break. Not a big deal, right? Not a big deal. If we were trading, which yes, we are trading, but with a lot of these, we're averaging down. I wanna buy this. I would love, and I know this sounds bad, maybe it does, is if this sells off down to 450, 472. I would love it. You want to know why? I know over the past 90 years, the S&P 500 has always recovered. And during times of market volatility, during times of recessions, it jumps your average return rate from about 10% to over 22%. So I want to see if I can find this statistic for you guys real quick. All right, copy. There we go. All right, let's pull this up. All right, so this right here is one of the things that I love. So this is the S&P 500, so VU, over the past however long, since 1950, where we have a market sell-off of 25% or more. Okay. Yes, during this time, it's devastating. You're seeing your account go down. You're seeing all of this stuff happen. But look what happens that following year. Average growth of 21%. So if I average down on VU, on QQQ, V, we're starting to thin out some of Google, but no, nevertheless here, on Amazon, right? All of these icons, as they sell off, we're taking advantage of that sell off here. But you got to be smart with it. You don't go very heavy. You average down, small amount of money, so you can get in on those dips. And if it does sell off, you're not hurting. Okay. All right. One of the stocks here that I'm actually looking at is going to be Meta. And if you guys are watching, make sure you guys check out our school, Code Trader, 51% off. Also, sign up with Moomoo. They're the broker I use. It's free, and you guys can get up to 30 free stocks, which is awesome. So, yes. All right, out of AD. Make sure you guys smash that like button. No likes on this video? Come on, man. All right, Meta stock here is on the list. We bought in. We actually made good. We made a good bunch of money off this stock this month. But, it's very similar, right? Stock on an upward trend, sold off down to that 200-day moving average line, undervalued on the RSI. But why I'm looking at it is if we look at the hourly time frame, right? We have this trend line breakout, boom, boom. But look at this, right? Look at this trend line. So it hits it, buying pressure. Recently selling off down to that level. So if we take a trade down, I'm honestly just kind of waiting for a candle to break up above the previous candle. So like if we look nice and close, we can see the wick up here. We're waiting for a candle to break up above that. And then we'll take a little small position on it. But yeah, good one there. Next one here, Garmin, great play. Stock on a downward trend line. Broke out, rallied up like crazy. Now it dipped down today just because of the general market selling off. So, yeah. But another one here, Procter & Gamble, downward trend line breakout. Look at that. What's DT? This one here just got notified. Let's see. Let's pull it up. DT alert is set. Let's see if I was smart on setting an alert. All right, let's see. Let's look at this. Looks like possibly I was thinking a trend line on this one. Possibly, maybe. Something like that maybe is what I was thinking. What was I thinking on this one? Why did I have an alert set? This could have been from a while back, but yeah. All right, Garmin, Procter & Gamble, USFD. USFD here, great upward trend, sold off down to that 200-day moving average line. Looking at that hourly, we can see heavy support, heavy resistance. If we remove this, let's draw these out. We have resistance up in this range. Support, what looks like in there, right? We can see buying pressure. So now you could buy down here, sell up here. The spread's not that much, but still is a good one here. ERJ here. Let's look at the daily time frame. Moving average line back up. This was a 50-day play. We can see it in the past. Hits it as support. Undervalued on the RSI. Let's look at that hourly time frame. Hourly time frame here doesn't look too bad. We have something like this here. So keep an alert. I would do 50-day moving average line on this one. Yeah, something like that. Tanger Outlets, or I think that's Tanger Outlets. Tanger. SKT. Man, that one is so annoying. SKT here is starting to move up a little bit. You know, the daily, 200-day moving average line play. Good one here. I gotta We'll do that here in a minute. GDS here, good trend. This one here broke through the 90. Next support's going to be at 22. TIM is a trend line play, which is actually performing relatively decent, which is good, right? Looking at this here, we have really no hard breakout. So what you do is you try to find support, which does look like something like that. So you can see boom, boom, buying pressure, buying pressure. Sometimes what you guys can do as well is if you go to the chart management tool and you're having a hard time with after hours, because sometimes during after hours, the spreads are like crazy just because, orders trying to get filled, not get filled. So you can go to extended time right here and just do not display, and it will help, and you guys can see now the trend looks a lot easier, a lot better. So, and then you guys can always put it back if you want it. So, display, just something you can do to help you. ADEA here, this one here starting to break through that support, just because so much sell off here today. DX here sold off like crazy, and this would be one like where we had this huge wick that could throw off your trend when you are drawing out tools. So go to your chart management, go to do not display. So now you can see it a lot easier, right? That trend line. So you can do like, something like that, where your alert needs to be set now, and then you just change it back. Something like that, not too bad. But yeah, I mean, opportunity-wise, as the market starts selling off here, we're gonna get a lot more plays, a lot more opportunity, which is always good. So guys, smash that like button, subscribe. If you guys are new to the channel, check out our school. And if you guys are watching and you're trying to get started with trading, check out our school, and check out Moomoo. You won't regret it. Just click that link, sign up. And I'll see you guys. So hope you guys enjoyed it. Smash that like button. Do what you guys do. And we'll see you guys next week.